Let's talk about why RALs are some of the most cash flow positive real estate investment opportunities. I'm going to give you 7 reasons why. Because opening an RAL home, it can be more cash flow positive than almost every other form of real estate investment, like a single family rental or even an Airbnb. And there's many statistical and economic reasons why. So let's dive in. When it comes to higher revenue per unit, RALs win all day long. We literally can create more steady and higher monthly rates. The average stay in an assisted living home is 3.5 years. And many people are paying, a range between $3,000 and $6,000 per month. So depending on the location and services that they need, it may be less or more than that. But in a single family rental, the average monthly rent for a single family is a lot lower. Maybe a couple $100 above what your mortgage is if you bought the home recently. If you bought the home a long time ago, maybe it's $1,000 more or $1,500 more. And that's great, but that's still really low margins. The other thing to consider is occupancy rates. In an RAL, you're literally going to create higher and more stable occupancy rates because the demand for senior care, it's consistent, it's growing due to the silver tsunami, due to the aging population, the baby boomers coming into the market. There is more, need than there's ever been before. And when we compare that to something like Airbnb, where occupancy rates can be highly variable and seasonal, and they really depend on the location, tourism trends, and competition, you're not really seeing that steady trend that you see in RAL. I want you to consider this: long-term tenants. In a single family rental where a family may be renting for a year, you're going to get a lot more high turnover rates. They have shorter average stays versus in an RAL, they may be staying for several years. So you're having lower turnover cost and you're having to not worry about that so much. That means less marketing for you. And I love that because you're not having to find a new family to move in every single year. There's a cost associated with finding new tenants. And if you're going to stay in a care home for an average of 3.5 years, or a single family rental for an average of a year, or an Airbnb for a week, those have a lot more high turnover than an RAL where you find that resident and they get to stay with you for quite a while. I also want you to consider this. In an RAL, there's additional revenue streams, extra services and amenities that you can offer. A care home can generate additional revenue from ancillary outside services like healthcare, meal plans, activities, transportation, adult daycare, you name it. All these different things can be bringing in additional revenue for you as a care home owner. But when it comes to a single family rental, there's really limited opportunity for additional revenue beyond the basic rent or nightly rate. With an Airbnb, we're often seeing people add those experiences in where, okay, you can get a private chef or someone come give you a massage at the care home. Well, guess what? The fee that you're tacking on is to pay that masseuse or chef. It's not that you are making extra income from that unless you're charging an astronomical rate. So there's really not many ancillary sales that you could be making in those other industries, but RAL, there definitely is. Something else to consider is the demographic trends. When you look at our population, you guys, there's going to be more 65-year-olds and older than we've ever had before. It is trending. We are going in that direction. And whether or not you get involved in RAL, get involved in something that helps the baby boomers, because there is going to be a strong demand for assisted living, but there's going to be a strong demand for everything and anything that they need over the next 10 to 20 years. And I want you to get your piece of the pie. With an Airbnb, demand can fluctuate with economic conditions, housing market trends, and really changes in tourism. You may or may not have a demand in your market where that home is located at all times. Single family rentals, depending on economic conditions, really people may or may not be able to afford to pay that excess that you're charging for them to rent your home. And that can really change things because apartments become more trendy when the economy is down. Something else that we should note is government support. There are potential subsidies and tax incentives when it comes to RAL. There may be government support, grants, tax incentives that are available for care home owners that are providing essential senior care services. But when you're in the single family rental game, there's limited government support. And Airbnb, nada. They don't like you. They want you out of here, honey, okay? So compared to the incentives for opening an RAL, I mean, again, we win all day long. When we compare economies of scale, the operational efficiency when you have more than one RAL, it literally grows leaps and bounds because these RALs can achieve economies of scale in operational costs like staffing, sharing your staff, maintenance, utilities, all those different things. You can really grow and scale really quickly with 1, 2, or 3 RALs. But single family rentals, you're managing multiple single family homes and it's way less efficient and way more costly on a per unit basis because the homes aren't making as much on the income. So when your expenses increase, when you need a new something, it's like boom, there goes the income for the whole rest of the year. The other thing I need you to think about is financial performance data. When it comes to an RAL, studies and industry reports often show that senior housing and assisted living facilities provide higher than average annual returns than other real estate investments. When we're comparing this to a single family rental, the returns can be less predictable. Maybe someone doesn't pay their rent. Listen, I know it sounds crazy, but that does not happen in RAL, and I'll share with you why. But Airbnb, it can also be more susceptible to market volatility. So if you're looking for something that's actually more steady, more stable, then RAL actually is the better place to go. And I know many people think, oh, a single family is going to be better in this regard. It's probably not, because depending on where you are, it may be hard to find a family, or you may lose all your profits from needing to do one upgrade. There's so many variables, but those are my 7 reasons why RALs are the most cash flow positive real estate investment opportunities. I hope you learned something. Make sure to give us a follow so you can keep learning.